The stock market bounced off very critical support, and the question now is it going to be sell in May and watch the market run away? First up, let's take a look at a monthly chart of Apple stock. So let's crack open this chart and see what's going on in the stock market today. All right. So today we are going to do the typical daily market analysis, but first I want to look at monthly charts of Apple and Microsoft to just hammer home a point. Looking at this monthly chart of Apple, you can see we are breaking out of this downtrending channel, which is a monthly macro view of Apple, and we are very close to all-time highs on the biggest stock in the market. When you're talking about Microsoft and Apple, these stocks move the entire stock market. So if they are going higher, you need to be aware of it. Also, just look at the saying, sell in May and go away. And you can currently see the May monthly candle on Apple is looking very bullish. And while there's plenty of time left in the month for that to change, we follow price action, and currently price action is telling us Apple is trying to break out and run. Now, even if I move this channel to the absolute highest point, you can see we are still getting that breakout. But the reason I have it down here is because we have more touches on more candles. And when you're drawing channels, you want as many touches as possible. So looking at this chart, we have a positive monthly 20 period moving average, and we're breaking out to monthly higher highs after we look like we're exiting the bear market of last year. Even with a chart looking this bullish on a stock like Apple, there are still people out there calling for a 15 to 20% crash. That is completely subjective, and it makes no sense to think something like that is happening because there is no objective evidence in the chart telling us so. So be very careful who you're listening to and be very careful where you're putting your money, because the market loves to go up over time and you cannot invest in short positions. You cannot continue to accumulate inverse 3x ETFs and expect to make money because the market loves to go up over time. If you're buying puts, you're in a world of pain right now and you need to be very careful in the options market. And as I've said before, if you're not profitable trading options, you simply need to stop. So now let's look at a monthly chart of Microsoft stock. And if I draw the same exact channel, you can see we are now 3 months breaking out of that bear market channel of last year. And we are back above a rising 20 period monthly average. So as you can tell, Apple and Microsoft are getting closer and closer to what could be all-time highs, or at least retesting the previous all-time highs. And when these market moving names are looking that bullish, you need to be very careful if you still have a bear bias. So a lot of people love to use that saying, sell in May and go away, and there's still a lot of people trying to sell you fear. But what I'm trying to teach you to do is following price action and stay objective and build a trade plan around managing risk. Continue to follow me and follow me through this entire journey, and you're going to learn a lot about trading, and you're going to understand the right way to trade is by being objective and only listening to the chart. All right, so let's jump back over to the daily chart of SPY. And on Thursday, I told you to be very cautious getting bearish at critical support, which is that level at 404. And I told you that even if you're bearish, you never assume that support breaks. So you never hold short positions when you get to support. You wait for support to break. As you can tell, that was a great suggestion because we had a very impulsive bounce after a gap up. So as you can now see, that was a bear trap breaking below the support trend line, sitting right on top of critical support. You never get bearish. Those bears got trapped with the overnight gap up and the run all day long. Now looking at the daily candle, you can see we're still getting sellers as we approach 414, and we did not close on the high of the day. So there's a very good chance Monday we are going to get a pullback back down towards this support right around 411. If we cannot hold the support at 411, then we're likely coming all the way back down to fill that gap, which is right around 407. However, you need to continue to follow the price action and make no assumptions because we also have gaps to fill to the upside at 415 and 421. So if we come down here to test support at 411 and start to bounce, we can instantly start heading higher to close those gaps above. And yes, it is possible we go into the 420s and everybody that said sell in May and go away is going to get burned. Remember, those are just sayings and they mean absolutely nothing because nothing matters except following price action on the chart. If sell in May and go away meant everybody made money, then we would all just load up on short positions and we would all become millionaires. But unfortunately, trading is not that simple. You're not willing to put in the work each and every day, and you're simply going to fall back on a saying like sell in May and go away, then trading is not for you anyway. If you're not willing to open the chart each and every day and look at it objectively and build a trade plan about managing risk and following price action, you're not going to be profitable doing this over the long term. So if you're not willing to do that, save your money and just stop trading. As I said before, there's still people out there calling for a crash and the market just continues to climb the wall of worry. Now keep in mind, yes, we do have gaps all the way down here at 396 and eventually those gaps will get filled. but we're going to know it because we're following price action, and that means we're going to break critical support at 404. So quite simply said, you're bullish above 404 and you're bearish below 404. And there's nothing else that's going to change that other than just opening the chart each and every day, knowing these critical levels, seeing where the price action is reacting off of these levels, and building a trade plan accordingly. I always suggest knowing both scenarios. Be prepared for the market going lower or the market going higher, and then trade the direction the price action is giving you. When we bounced off support at 404 and gapped up, that instantly told you the market wanted to go higher. And even if you didn't carry an overnight position and you just simply stayed bullish for all of Friday, you still made very good profits by being objective and following price action. So right now in SPY, you're bullish above 411, and if we break below 411, you're instantly getting more risk off for a retest of 407. It's that simple, don't overcomplicate it, and there's no reason getting bullish at 414 because that is going to be a strong resistance. Never get bullish at resistance, never get bearish at support. Let the price action do all of the talking. Remember, to get bullish, we need to see resistance breaking, and to get bearish, we need to see support breaking. So let the price action guide you and be prepared for either of them. On the NASDAQ 100 triple Qs, we were up 2.13% on Friday, and the big tech sector is still absolutely crushing it. I told you on Thursday this level right around 315 to 316 was critical, and if we bounce from here, that would be our next higher low. And that is exactly what we have with a very impulsive bullish candle that is now breaking out to another higher high yet again. So this is officially a closing higher high because we took out the previous closing high. And now this is officially another higher low because we had the price action pivot from a higher low from our previous low where we bounced from 312. So again, this is a textbook bull trend, which means we're very likely going to that double bottom price target at 327. Does it guarantee we get there? Of course not. So manage your risk right here at the rising 20 daily moving average around 318. You could also manage your risk right here at 321 if you want to have a closer risk level. If we do not bounce from 321 or we break below it, you can instantly expect us to come back down to lower support levels. So as I always tell you, continue to stay objective and follow price action. And as you can tell with the moving averages, we are still in a bull trend and we are still making higher lows and higher highs, and that is 100% objective. On the Dow Jones, we are up 1.63% on Friday, and we did bounce from that overextended condition. As I told you on Thursday, we were just way too far outside that lower Bollinger Band and due for a bounce, and we did gap up and came all the way back up to resistance right around 337. To get bullish, we need to break above 337 because we do have gaps to fill to the downside right around 333. So it would make complete sense if we did get rejected to come back down towards this support between 333 and 334. As long as we bounce from that support, we can continue to go higher. But you need to be very cautious getting bullish if you're getting bullish right here at resistance at 337, so wait for that resistance to break. On the Russell 2000 IWM ETF, we were up 2.38% on Friday, and we did get that very strong bounce off of the bounce or die support at 170, because if I zoom out, you can see this is a giant head and shoulders pattern if we break down below the neckline at 170. The bull stepped in and bounced, but you can see we did not close at the high of the day, and we're still below resistance between 175 and 176. We now have a gap to fill down here at 171, and we still have the gap to fill to the upside at 181. So only get bullish if we can clear this resistance zone between 176. If we get rejected, we're coming back down to fill the gap to the downside. And once we get there, we'll have to see if price can hold above support or if we're going to break through it and head back down to 164. On the ARKK ETF, we were up 4.62% on Friday, and we're back up to what could be critical resistance between 37 and 39. Remember, we have gaps to fill to the downside at 36 and 32. So if we get rejected from all of this resistance, this is just going to be a lower high before the next lower low. Nothing moves in a straight line forever, so even if the path is lower towards 32, we're likely going to get a lower high before the next lower low. So do not get bullish at resistance. We are still very likely in a strong downtrend, which you can tell by being below a negatively sloping 200 daily moving average. I suggest not getting bullish until we can clear back over 40.5. On the VIX, we were down 14.44% on Friday, and the VIX continues to crush every time it tries to break out above 20, which is the exact behavior you see in a bull market. I've said so many times this year that the VIX behavior is that of a bull market and not that of a bear market, and the VIX continues to prove that it wants to crush lower. Like I always say, be objective, and the VIX is 100% telling us everything we need to know. As long as you do not have a baked-in bear bias, the VIX is continuing to crush below 20, and that is bullish. On Bitcoin, we're currently down about 1.4%, and Bitcoin is trying to break out to a higher high above 29,500, but currently struggling to do so. That doesn't mean it can't, and that doesn't mean it won't. So if it does continue to go higher, we are likely going to that next price target right around 31,800. 21,800. We're only getting bearish if we break down below support at 27,000 because that means we have this double top look, then we're likely going to flush back down towards 25,000. On Google stock, we were up 0.84% on Friday and we're still closing right around this resistance at 106, but if we start breaking above that, we're very likely going up to that price target at 110. You can stay bullish above this critical support zone between 100 and 104, but if we lose that support zone, you're coming all the way back down to the bottom of the channel at 96. On Amazon stock, we were up 1.59% and we are clearing that resistance at 105, but at this point, I would wait for a break back over this negatively sloping 200 daily moving average. The danger in getting bullish here is that it could be a lower high and a rejection from this moving average, and we could still come back down to lower prices. Now, if we continue to close above 105 and we break above the 200 daily moving average, then I will be looking for that gap fill and the top of the channel right around 115. So it is very close to looking bullish. We just need a little more confirmation. On Microsoft stock, we were up 1.72% on Friday and we did hit the price target and close the gap at 310. And this is very likely where we are going to see a little bit of cool down in Microsoft because we did get that bull breakout without the retest between 290 and 293. So while I do think Microsoft can still go a little bit higher, I do think eventually we are going to get that cool down, and this could be the seasonality of sell in May and go away, but we need the price action to confirm it. The best way to do that is wait for a breakdown below this previous low at 304, and then you can instantly get more risk off for the retest of that breakout. On Nvidia stock, we were up 4.06% on Friday, and I told you if we were going to get a higher low bounce, it was likely going to be from the rising 20 daily moving average, and the confirmation to get bullish would be that break above 280 for the price target at 298. And so far, it looks like that is exactly what the bulls are doing. They got the bounce off support, they broke the resistance, and they're going for that price target between 296 and 298. Now, there is still one more hope for the bears, is that this is a lower high rejection before we come back down to 262. So you still need to watch that resistance right around 289. However, bears have been trying to call a top in this stock all year long. And if I had to guess, bears are losing a lot of money in this stock because they cannot walk away from it and they continue to try to short it. Don't be that person, follow the chart and stay objective, and you can clearly tell this is a bull trend. On Tesla stock, we were up 5.5% on Friday, and Tesla had one very simple rule I gave you, is that it had to close above 167 to get bullish. And that is exactly what it just did. That was a very simple trade, bouncing off support off 160, breaking the resistance trend line at 164, and then breaking the resistance at 167. Now, as you can tell, the candle closed with indecision because it's still closing below a negatively sloping 20 daily moving average. But there's a very good chance above 167, we are going to close that gap above 177. If we get rejected from the negatively sloping 20 daily moving average, you need to be risk off, because from here, if we start to break through support, this could be the lower high before the gap fill at 146. You're going to know that in the price action because you'll see it losing support at 167, and then you'll see the loss of support at 160. For that reason, manage your risk right here at the breakout at 167. And if we break down below that breakout of support, you're instantly more risk off. On Apple stock, we were up 4.69% on Friday, and we finally reached my price target at 171 and then some, and we're going up to the August highs around 174. Now, if you're on the Stocks Channel Discord, this is no surprise to you because we've had this price target on Apple for many months now, and I told you there was a very good chance Apple was coming up to these prices. And here we are finally reaching the target and starting to get that little bit of an exhaustion blow off top. So when you get market moving names like Apple and Microsoft reaching price targets, and they're very likely due for a cool down, you do need to heed a little bit of caution, but don't get sold on an idea. We need to still follow price action. So what we need to see on Apple to get more risk off is a clear rejection from this resistance. Otherwise, we will be looking for a breakout in the next price target at 177. If we start to get rejected, and as you can tell, we are getting overextended outside the upper Bollinger Band, so a cool down is very likely, we will be looking for this gap fill down here at 167. And that is going to require the break below support at 170. So just follow price action and let it do all the talking, and you're going to have a very simple time trading this market. On the financial sector, we were up 2.47%, and we are getting that dead cat bounce from the overextended condition, and we now have a gap up and run, and we're still in a bear trend as long as we're trading below 33. On the industrials, we're up 1.5%, finding resistance right at the 50 EMA, and the only way we're getting bullish is if we can clear these highs at 101. The healthcare sector was up 0.9%, finding resistance at 134, but if we break above 134, it's going to look like a break of the bull flag, and I think we're going to run to 137. On the energy sector, we were up 2.71%, getting that dead cat bounce we were expecting, which could take us as high as 83.7, but we need to clear these resistance levels above. So jumping back over the S&P 500, there are gaps all over this chart above and below, and the only way you're going to be an effective trader in this market is by being unbiased and following price. I've told you time and time again this year that this is a bull trending market and we continue to head higher, and you can see the big tech sector is leading the way, which is exactly what you want to see. Yes, there are plenty of reasons to be cautious, and that is why the market is called climbing the wall of worry. But if you are one of those people that continue to short the market as it's trending higher, you are going to look in the rearview mirror one day and you're going to seriously regret it, because you're going to see that it was a very obvious bull trend that you were ignoring. There's still people out there trying to sell you fear. There's still people out there trying to tell you to sell in May and go away. And there's still people out there telling you the market is going to crash. Those people have no right doing that because they have no clue what's going to happen. They're simply guessing, and they're 100% being subjective. Nobody knows where the market is going, and that's why we follow price action and we stay unbiased. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.